Okay, you already started the recording. Perfect, perfect. So, hello and welcome everybody. It is a pleasure to have so many of you here in our first webinar in cooperation with Paris-Sorbonne Business School and BMI Business School Istanbul. We have roughly exactly 107 people, and it's counting, still counting. Not only from Turkey and France, but all over the world, such as China, Mauritius, and some other countries as well. These were the ones that I was able to recognize. So we ask you to, as you already did, to mute your microphones and videos. And just to have a short presentation, and then I will pass the ball to Professor CABY. BMI is the unique business school in Turkey, established in 2004, providing executive education programs for business executives in cooperation with top universities and corporations. Over 16 years, we have completed more than 700 open enrollment programs, reaching an alumni of 12,000 people, cooperating with a faculty of more than 300 academicians and business professionals. Also, we design custom-made programs for organizations addressing their daily or strategic businesses challenges together with universities. In this regard, we are cooperating with Paris-Sorbonne Business School for roughly, I think, Jérôme, 2 years? Yeah, 2 years. We already had an executive education program on board titled as Global Digital Leaders. The next session will begin by September 2020. Those who are interested can also look to the program as well. And just a few words about Sorbonne Business School. Sorbonne Business School was established in 1950, exactly 1956, if I'm not mistaken. And is associated with the worldwide known, one of the oldest universities of the world, University of Paris-Sorbonne. It's an institution that provides top-notch management education and globally recognized degree programs. Today is the first session of our webinar series, which is on financial management in the time of crisis, how to tackle COVID-19 crisis. With Professor Jérôme CABY, Professor of Corporate Finance at Sorbonne Business School. Instead of taking more time, I pass the speech to himself for the presentation. Just a couple of words regarding the setup, just as a quick reminder. You can forward your questions via Q&A section through chat box. And Professor CABY will try to reply them either during the session or end of the session. We plan to have around 1 hour of session today, and please keep in mind that today's session is also recorded, as Professor CABY told, and can be reachable over the web after this session is over. So with this short introduction, so Professor, the ball is at your side.
Thank you, Yassine. Thank you all for attending this webinar on financial management in time of crisis. I will share my screen with the presentation. So we will address an important subject, which is the financial management in time of crisis. And there were a subtitle, which was how to tackle this crisis, COVID-19 crisis, how to try to tackle, because financial management is able to address some issues, but not all the issue regarding this crisis. I must also point out that I won't address specific financial issues like asset management or wealth management. This webinar is really focused on financial management of companies, not financial markets or asset manager of wealth manager. To understand the impact and before considering the tools that we can use to face this crisis as a company, we must see what is really about in terms of GDP for this crisis. If you have a look to the last forecasts from the European Commission regarding GDP, you can see that for most developed countries, the impact is tough, huge. For Italy and Spain, it's about minus 10% for this year. And for France and UK, it's about 8% less. And United States and Germany, a little bit less, the 6 to 7% decrease in terms of GDP. Only China will experience growth in 2020, but if we compare to the traditional growth rate of China, it's really a reduced growth rate for China.
And also, Jérôme, sorry to interrupt you, but for Turkey, for 2020, it is minus 1% as well.
So a sort of recession, hopefully not a depression for most countries. And if we have a look to the forecast for 2021, we see that with the exception of China, the GDP for 2021 will be lower than the GDP for 2019. We can hope that we will reach again the same level as 2019 in 2022. So it's at least a 2 years crisis, and we can expect some growth in terms of unemployment rates in this country. So we need not only to address financial issue from a short-term perspective, but also from a medium-term perspective in order for the company to survive to this crisis. And in addition, if we have a look to the rate minus 9, 10, 8%, and if we compare to the last crisis, the financial subprime crisis in 2008, the impact wasn't so tough. So it's really a new crisis, and the only comparison in terms of economic history that we've got, it's 1930, which is not a good souvenir for the economy and the years that for the 30s in most countries. Now, if we have a look to the impact on the business, you've got some data here which are on business on different, mostly it's a sample of mostly European company. You've got one US company, American Airlines, in this sample. If you have a look to this, it's the change in revenue for the first quarter of 2020, January to March, compared to the same quarter in 2019, and the figure are like for most companies, because to avoid some issue regarding mergers and acquisition and exchange rate. And if we have a look to the impact on the turnover of this very big for most of the company, very big companies, we see that the impact is very diverse. We've got a first group. On the right part of the figure. We see Biomérieux. It's a French company, French pharmaceutical company, and basically they are specialized in tests and they are manufacturing tests. And we know that during the current period, tests are very important. Then we've got Carrefour from the retail industry. Again, two big pharma company, Bayer in Germany and Sanofi. Vivendi, which is entertainment, music, videos, and so on. And also agri-food with Danone and Nestle. And we see also AXA, an insurance company. I will speak about the insurance company just after, but for the other sectors, the crisis, the impact of the crisis of the turnover is positive, because we need to go to the hospital, we need to buy drugs, and also we need to eat and to go to some supermarket or hypermarket. The insurance company is quite an exception. Maybe the second quarter will be different, but basically for some of their activity, they are still, people are still buying insurance. But for instance, for car insurance, you don't have a lot of accident during the lockdown. So maybe this is the reason why for the first quarter, they have not been really impacted. We will see for the months to come, maybe the situation will be a little bit different for the insurance industry. We then have a second category of industries: energy, telecommunication, banks, materials linked to the construction industry, and consumer products. For this industry, the impact is not very tough. Enel, for instance, the energy company in Italy, is still growing compared to the same quarter in 2019. And for the others, you see a little decrease of the turnover, but basically the revenue are steady. So we will see in the months to come if the situation is worsening or not, but basically it's not a big issue for this kind of company. And then some industries that have been really been impacted by the crisis in terms of activity, in terms of turnover, revenue, sales. And you are not surprised, the automotive industry, you are not buying cars currently. Events company, maybe you don't know this French company, GL Events, but they are specialized in organizing events, and they have lost about 1/3 of their revenue in only a few weeks. The luxury industry, airline, as a matter of fact, we are not traveling currently, and oil and gas company, petroleum company, because the demand for oil and gas has decreased since the last month. So we see that the impact of the business is very diverse regarding companies. It depends on your industry. If some industry are benefiting from the crisis, some other are not, are really impacted by the crisis. We must notice that the impact is measured only on the first quarter, and most lockdown in Europe, especially, has started only mid-March. Yeah. And the first quarter is January to March, even if since February and the beginning of March, we were expecting such a lockdown and confinement. But this being said, in terms of activity, it's only about 2 or 3 weeks impact on the turnover. And if we go back to the previous figure, you see that it's a huge impact, especially for the company on the left side of the figure.
So, Jérôme, this shows that, sorry to interrupt you, but this shows that roughly 20% or 10% of the revenue is vanished within only just 2 weeks of time, yeah, if I'm not mistaken.
Yes, exactly. That's exactly okay. This. And we can expect that the impact will be much more severe on the second quarter, on Q2, because then we will be experiencing, we have experienced the lockdown during April, most of May, and since, even if in some countries like France and Turkey, we are about to, or we have more or less start again, it's not the same level as the previous level in January or February. So we expect that the impact on the revenues for the second quarter will be really tougher than the one for the first quarter. But for this, we need to wait to get the data in July or August. Also, we can notice that companies with a strong presence in China and in Asia have been were affected earlier since January, because the plague has started basically in December, January in China. And for instance, Schneider Electric recorded a 6.4% decline in total sales for the first quarter, but about 20% in Asia Pacific. So this 20% is maybe more forecast for most of the company for the second quarter, because China has been impacting before other countries, and it was only minus 2.8% in Western Europe and little growth in North America. So you've got the same kind of figure for the luxury industry, for instance, for LVMH or Kering or this kind of company. It's also the same situation, a huge impact in the Asia Pacific area starting in January. And basically, as the plague was progressing from the east to west, then the turnover was decreasing following the plague. We will focus, because basically the green company, pharmaceutical companies, for instance, or retail company, they are not experiencing any financial issues. So there is no specific financial tools to implement and to face the situation. So we will focus on the orange and red industry, and we will try to see what are the financial tools to tackle the impact of the COVID-19 on margin on one hand, because as your revenue are decreasing, then also your margin, and sometimes the pace of decreasing of margin is higher than the one of revenue. On another hand, we will also assess the way to tackle issues regarding liquidity. I remember you that liquidity, it's the company ability to continue as a going concern, to repay its debt on a short-term basis. So are you able to repay your debt with your short-term assets? Let's say cash and cash equivalents. So short-term, you've got short-term, and do you have enough cash in order to repay your debt? And sometimes at the end of the presentation, I will also address more medium-term issue in terms of liquidity, which is solvency, because at the end of the day, if a company is not able to address its issue in terms of liquidity, then it can turn into a default, and at the end of the day, and eventually the company can collapse. So it's really a matter of urgency to address liquidity issue, maybe more urgent than the margin issue, because if you are not able to address the liquidity issue, company will be in default with suspension of payment. In the US, it will be a Chapter 11 procedure. So we will see what are the tools that can be used to try to avoid any suspension of payment and default for any company.
Jérôme, just a quick question on this subject. Maybe I'm interrupting you, but with your profession, for the second quarter, what do you think? Which one is important? Is it the revenues or is it the liquidity? So which will be the king for the second quarter, in your opinion?
Liquidity is
okay.
Priority,
okay.
Clearly, because without any liquidity, you are simply disappear, and your margins, it's useless to address the margin issue, as you are no more a company. So you have disappeared, you have collapsed. So liquidity is really the priority before margin, even if margin can help you also to address the liquidity issue.
Yeah, it's always the chicken egg problem, but.
So the impact on revenue and margin, I've chosen one example, which is the very, very big oil and gas company from UK and Netherlands, the Shell company. And you've got the data for the last 5 quarter of this company in terms of revenues, operating expense, EBITDA, EBIT, and net income. If you have a look to the revenue, you see that the impact is really important because you've got a decline of about 30% of the revenue for the last quarter compared to the same quarter in 2019. I prefer to compare from one quarter to another to the same quarter from the previous year to avoid some seasonality issue. So really the impact is tough, huge. You are losing about 1/3 of your turnover of your sale just in a few weeks. We can see that they are quite good to manage this because if you look to the operating expenses of this company, the decrease of the operating expenses is quite at the same pace as one of the revenue. And this is the target for a company. If your revenue are decreasing, you should also reduce the expenses at the same rate. Partly it's automatic because you are less selling than you are less buying on the other end. But basically it's not enough, and I will address this. And you see that this little difference between the decrease of revenue and decrease in operating expenses result in the higher decrease of EBITDA and of the EBIT, and finally of the income, because we were making money 6 billion of net income in the first quarter of 2019, and they are losing money in 2020. So it's not enough. You need to reduce expenses, but it won't be enough to make the company profitable at the end of the day. And you've got a sort of collapse of the margin, even if the situation has been quite well addressed by Shell during the first quarter. So you've got a natural decrease in variable cost. So you benefit for this. You are less selling. You buy less. So this, but it's not enough. It's not sufficient. You must check every purchases of your company. When you see the plan that has been implemented by the company, mostly they have introduced some freeze of wage and hiring. They have reduced R&D expenses, consulting, or postpone, because you've got two solutions. You can cancel some expenses, and some expenses, they won't hurt the company at least immediately, or simply postpone because you expect your turnover and your sale to start again, and then you will be able to have this kind of expenses. But the important information is the natural decrease is not enough. You need also to address line by line your expenses and to see, is this really necessary for the company for the 1 or 2 months to come? Can we postpone? Can we cancel? And this is a long work in each company to assess, especially for this very big company. So every line of expenses, operating expenses, you check. Do you really need to make this expense during this quarter? If necessary, fixed costs, because if addressing the variable cost issue is not enough, is not sufficient, then you must also consider fixed cost. And you know that the main fixed cost for any company are HR expenses. So you may consider also layoff. And if you have a look to the situation in the airline industry, some company, for instance, I think Air Canada has recently announced last week that they will lay off 50% of their employee during the next month.
More than half then.
Yes, about half of the employees will be It's not a good news. It's not a good news because if you are laying off people, if you are reducing expenses, then you will add crisis to the crisis. You will reduce the pace of growth of the GDP of the country and of other countries. So you need to be cautious, not to overreact, because you will need people when the sales, when the turnover will grow again, when customer will come back, you will need people. So it's a balance between the liquidity that we will address after and your immediate need also to stop losing money. So, but for airline, for instance, they are not working at all, or basically not working at all in most countries, and they have to consider. And we know that in terms of restart, airline won't be the industry won't be the first industry to start quickly after the crisis, now in May, in June and July, because travel won't be allowed from one country to another for the next month to come. Now the impact of the crisis on liquidity. One example, which is American Airlines, an airline company with its cash flow statement, a simplified one. And we compare again the one for the first quarter of 2020 to the one of the 2019. If you have a look to the cash from operation, I remind you that cash from operation is net earnings plus change in working capital. They were making a lot of cash out of their operation in 2019, and now they are losing money, and we can understand why they are losing money in the first quarter. And they have decided, in order to address the issue, to invest less. So if you have a look to the capex, to the capital expenditure of this company, it's coming from more than 1 billion to less $1 billion US, and they have issued new loan in order to face the liquidity issue. And that you see, including new long-term loan, it was only 400 billion in 2019, and close to 2 billion, 400 million, and close to 2 billion in 2020. And at the end of the day, their closing cash balance is similar from the first quarter in 2019 and 2020. So basically, and cash flow statement is really an important statement, financial statement to address currently if you want to assess the situation of any company. It's better than the income statement or the balance sheet, because we are focused on liquidity. And currently, you see, basically, we are not making cash out of their operation. They have cut capital expenditures and investment, and they have asked new loan to the market and to the bank in order to survive to the current situation. So huge impact on operation, decrease in capex, and increase of borrowing to address the current issue for this company. Cutting capex. For instance, again with the oil and gas company Shell, you see the capital expenditure of this company for the last 5 quarters, and you see that they have cut about $2 billion of capital expenditures decrease compared to the fourth quarter of 2019. And we are expecting a target for 2020, less than 20 billion for the whole year, the whole 2020 year. So basically 3 billion less than last year. So this is immediate in terms of liquidity, because if you are not investing, then you don't need cash to invest. The issue is you can't stop your investment and your capital expenditure for the future, because you will need to invest, especially if you are in the oil and gas industry. You need to invest to find a new zone for oil and gas, but you can reduce in order to have some gain in terms of cash for the current months. And as a matter of fact, if you read the plan from the big company, most of the big company that has been hugely impacted by the crisis, they have announced that they were reducing their investment for the not only for the quarter and the next quarter, but for the whole 2020 year, and they are waiting to know what will be the forecast for 2021 before deciding to continue to reduce their expenses in terms of investment or to start again to invest. In terms of working capital, so working capital management, working capital, basically it's inventories plus current receivables minus current payables. So it's the money you are invested in your operation to fund and to finance your operation. As for the expenses and the operating expenses, you've got quite automatic and unintended and voluntary decrease of your working capital, because you've got less customers, you are selling less, then your receivables are also automatically declining. Maybe also your inventories, this is a more complicated issue, and I will speak of it later on. And you've got less payable also because you are buying less to your supplier. So there is quite an automatic decrease of your working capital. For this company, it's huge because the change in working capital for the first quarter is about $7.5 billion US. So even if it's a very, very big company, it's a lot. They have reduced their inventories, they have reduced their receivables, and also they have reduced their payables. But you can try to maximize, to optimize your working capital management. But you need also to be cautious, because after the crisis, you will need your customers and you will need your suppliers. So if you decide, for instance, your receivable collection was 30 days, and you decide now that the receivable collection is 50 days, 15 days, then it's better for you. But you are creating a liquidity issue for your customer. And in terms of customer relationship, it's not really a good idea. The good idea is to maintain, except if the collection period was too high before, except if your working capital management wasn't well managed before. You don't need to address too tough to be too tough with this, because you need your customers, you need your clients, and you need your suppliers also. We've got a specific issue regarding inventories, because the good solution is to reduce inventories. But as you know, there is a lot of companies that have adopted the just-in-time methods or lean management and so on. They have faced some disruption in terms of supply during the last weeks. And sometimes for this company, instead of reducing the working capital, they have decided to grow and to increase the inventories in order to face potential supply issue regarding just-in-time and lean management. Because just-in-time techniques and lean management are very effective tools to reduce working capital, especially inventories. But when nobody is able to supply, and we, especially in the pharmaceutical industry or this kind of industry, then it's becoming an issue. So we can expect that during the next month, in most companies with just-in-time and lean management tools that have been implemented in the past, but we will try to increase a little bit their inventories in order to face potential disruption. It's very bad in terms of financial management, but if you can't produce, then you can't sell, and then working capital management is useless. So it's a question of priority. You need to produce, you need to sell, and maybe you need to increase the level of your inventories in order to address this kind of issues and limit the damages. For instance, we've got a good example in France, but I think in other countries regarding masks. You need to grow your inventory in terms of masks to be able to supply masks to everyone. How to address liquidity issue also? Decreasing or suppressing dividends and share repurchases. Many companies have announced that they are suppressing or reducing dividends and share buybacks, like Accor, American Airlines, or Renault. It's kind of, I don't know if it's the same in other countries, but it's kind of controversy or polemic in France, the fact that some companies have decided to maintain or even only to reduce the level of dividends and share repurchases. But this solution, I repeat this, is only for companies that are facing liquidity issue. If you don't face liquidity issue, you can give dividends to your shareholders. I must remind that dividends are only a transfer of liquidity to shareholder and not a transfer of wealth, nor compensation, because especially in France, people are considering that dividends are a sort of compensation of shareholders. That's completely wrong. If you have a look to the stock price of a listed company, let's say that the current stock price is 20 euros, but they are about to pay out 2 euro dividends to their shareholders. Immediately, when they pay out dividends, the 2 euros, the stock price is coming from 20 to 18 euros. So there is no impact on shareholder wealth. There is no impact on shareholders, and it's not a compensation. It's part of the equity of the company. And if the company is not facing any issue in terms of liquidity, be my guest, you can give dividends, especially if you have not been supported by your government in terms of financial aids. But normally, you are not supposed to ask for financial aids if you are not facing financial issues from the government. I think that the debt of the different states is high enough to avoid this kind of behavior. How to address also liquidity issue? New borrowings. So first possibility, you've got existing undrawn credit line. So it means that your CFO has been foresight, he has planned ahead, and he's got undrawn credit line, then just use it if needed. This is really because sometimes company, they don't want, because you are paying some fees for, not interest rates, but fees for these undrawn credit lines. Really, it's a good tool because you don't need to negotiate with your banker during the crisis. You are negotiating before the crisis, and it's easier to negotiate with the banker before the crisis than during the crisis. The conditions won't be the same. So if you've got existing undrawn credit line, and maybe this will be a lesson for the future for most companies, you need to have some undrawn credit lines to face any black swan as this flag in the future. You need to plan ahead and you need to anticipate this kind of issue. Or you can issue new bonds or notes on the market. And basically, if you have a look to the statistic on the bond market during March, April, and May in most developed countries, the level of new insurance has been tremendous. Really, most companies have asked new bonds, have issued new bonds. For instance, I've got two examples for you. For instance, just 2 weeks ago, Boeing, the aircraft manufacturer, they have issued 25 billion US dollars bonds, 25 billions. And for some of these bonds, the maturity is 30 years, 30 years, which is also uncommon to borrow money, not only for the next 2 years, but for 30 years. And thanks to this, Boeing has been able to deny the support from the US state and the condition with the support from the US state. And another example in the US, the Walt Disney Company, you know, the theme park, most of the theme parks are closed currently. I think that the one of Shanghai is about to reopen, but they have also issued in March 6 billion and in May last week 11 billion more in bonds. So this is a solution. You are issuing new bonds or notes, but basically you may prefer bonds. New bank loans, you ask your banker to give you more money, or new undrawn credit line, so you don't need it immediately, but just in case. If the situation is worsening, you need to plan ahead, you need to anticipate. And if you don't have this in your portfolio of borrowings and loans, it's a very good idea to try to negotiate with your banker, or if you're a very big company, with some syndicated loan or credit to get the possibility to have some more money. But there is a but, and it's a big but. Because yes, you can borrow, and basically it's not so difficult currently, but then it leads to an increase in debt ratios. So it means that at the end of the day, you will have to repay this debt. So it's not only a question of having the liquidity, and the liquidity issue then may be transformed in a solvency issue. If the level of your debt ratio is too high, then it could be an issue. The interest rate will grow also. Basically, it's not a big issue currently because the interest rates are quite low. But debt means repayment. And yes, you need debt. If you need debt to address the short-term liquidity issue, it's a good solution, but don't forget that you will have to repay this debt. Sometimes you've got some debt covenants. Debt covenants are conditions. For instance, it may be mentioned in your credit line that if the level of EBITDA is below this level, or if the level of debt ratio is above this level, you are supposed to repay immediately the loan or the credit line. So sometimes you need to renegotiate your previous covenant on previous credit lines or syndicated loan because you have breached some covenants. And finally, it leads to an increase in interest expenses and to a decrease in margin. And we were addressing the issue of margin just 5 minutes ago. So you are addressing the liquidity issue, but you are creating another issue regarding margin. So from my perspective, on a midterm perspective, I think that the over solution, and I think we can expect this to happen during this summer and fall, it will be new equity insurance. So because at the end of the day, if you are facing liquidity issue that are becoming solvency issue, then the solution is not to borrow more money, but to ask more money to your shareholders. Maybe you have done a lot of share repurchases during the 2, 5, 4, 5, 6, 10 years, 10 previous years. Now it's time to go back for the shareholders and to give and to increase the capital of the company. I am quite sure that in June, July, August, September, and fall, basically, especially in the financial market, in the listed market, we will see a lot of equity issue, even if the shareholder won't be very satisfied because the situation of the company is worsening, the margins are declining, and in addition, you will ask more money to your shareholders. But it's a question of survival at the end of the day. And at the end of the day, it's the task of shareholder to address this kind of issue. It's not the task of banks and markets to address markets in terms of bonds to address this issue. An intermediate solution would be to issue convertible bonds. So it's a midterm solution. So bonds that can be converted into equity. This maybe we will also see a growth of this kind of issuance during the next month. To conclude, in terms of financial management, the proposed solutions are not very original. It's only a matter of optimizing your financial management, because working capital management, issuing new debt, suppressing dividends, increasing your capital, basically it's not new tools, it's only tools that you need to use to adapt your company to the current situation. Most of these tools, they are addressing only short and medium term issues, except increasing capital and maybe some bonds with high maturity. So these solutions are adopted by large companies could increase the crisis, because if every company are reducing their expenses, laying off people, employees, reducing their working capital, then it can lead to a severe economic downturn and maybe a depression. So company also must be reasonable. They must survive, and it's their duty. But also we have to be cautious, because if we don't want to see a lot of collapse, especially in small and medium-sized companies that are suppliers of this company, we need the big company also to some exemplarity from in terms of behavior. And to conclude, the quotation of Henry Ford, the founder of the Ford Motor Company, about the fact that only turnover growth can solve the problem, because as Henry Ford has told, it is not the employers who pay the wages. Employers are only handle the money. It is the customers who pay the wages. So the focus of company is sales. Basically, financial management is only a tool to avoid over issues. But the first task for every company is going back to business. That's the end of my presentation. Thanks for attention. I'm ready for question. I will stop the sharing of the presentation.
Jérôme, thank you very much for this lovely presentation. It was very useful in my opinion, and we all understand so it was as the oldest wording says cash is the king. So it seems that cash is the king for the time being. So
Yeah.
we need the liquid to survive in the storm. And there are lots of questions already coming out. Some are relevant, some are less relevant. But did you see them, or shall I read them to you, or how shall we do this?
Well, I can read some. And regarding inventory, if companies are not selling, how the inventory can decrease so much. Now, it's a shell company, is an oil and gas company. That was this example, and they have reduced the production of oil, and immediately, because we are still, you still have a consumption of oil and gas, because basically we need the fuel, we need gas for even if our consumption is reduced. So it's quite automatic for them. They are reducing the production of oil and gas, and this is possible for this kind of company. It was specific to this example, because your question is right. If you don't sell, if you stop, if you are a manufacturer and if you are stopping your production, then basically your inventory will be steady. But if you are continuing to produce, even if you are not selling anymore, then your inventory will grow. So you have to address quite quickly the issue in order not to see your inventory having too much increase.
Yeah, there's a very interesting question from Onur Öztekin regarding the supply chain. So maybe I should, this is a very general question, not very relevant, but very good question in my opinion. So
what do you think of the new?
In my opinion, let me answer this, Jérôme, if you don't mind, and then I will also have your views as well. And this is also a very interesting question, since this
Really. I've seen
COVID-19 popped up from China, so everybody is questioning in the upcoming months and years how the supply will be from China and so on and so forth. And so if something like this happens, what will be the supply chain problem? In my opinion, regarding Onur Bey's question, in my opinion, no, they don't ask for their far suppliers to their close regions, but instead, most companies, and some of them are my clients as well, most companies are considering to, even though it's being less cost efficient, they're having alternative source points from different countries and from different companies to leverage the risk, because until now, everybody was mostly focusing on the cost-effective part. If you are cheap and if you are effective, then you are the king, and you will become the #1 supplier. But now they are trying to balance something like 40% from one supplier, 20% from another, and 20% from another. So they are trying to have the balance. Not geographically, not only countrywide, but also they're also distributing companies as well. So this is what we are going to face, in my opinion. And Jérôme, maybe.
Yeah, I agree. It's maybe it won't change a lot, but a new balance. So less cost, more reliability. But clearly, I'm not sure. So I'm not sure, because cost is still very important for most companies. So for strategic suppliers, maybe some location may change, especially some production that was now in China or in Asia as a whole. Maybe some will come back in Europe, but I don't think it will be the main decision, except for very strategic projects. Because the issue will be also the gap in terms of cost. So if the gap is a little one, maybe we can consider to to produce again this kind of device, but if not, and if it's not very strategic, I don't think we will address, we will stop the cost efficiency procedure. A question from Renaud Prodel about how do you combine short-term crisis management and vision so that employees keep going to be embedded? It's a very good question. I'm not sure to have a good answer to this question, which is more about HR management and leadership in the company, because the financial answer won't address at all this question, except if, and it was part of my message, if companies need to be cautious about implementing too tough financial management to face the crisis, because as you will need customers and suppliers in the future, you will need also loyal employees in the futures. But if I am more, I won't tell more what, the unemployment rate will certainly grow. So people will automatically be more embedded because the possibility to get a new job elsewhere will reduce in the near future, but it's not a good solution. So, but I forward this to my HR colleague in order to maintain the engagement and commitment of employees during this crisis with freezing of wages and so on.
So maybe one final question, Jérôme.
Yes. The effect on inflation.
Very good question.
Yes. Basically, we don't expect inflation to start again, even with the quantitative easing policy. With much more money, because I think German and French have announced that they will also put 500 billion euros more in the months to come to help the economy to start again. But we are not expecting inflation. From an economic perspective, we don't understand, because normally, but we are not currently, and we were not expecting, we were not experiencing inflation before, even with the quantitative easing policy of central banks. And I don't think, because the effect of the economic downturn will be higher than the one of more money in the economy. So I don't think that we will face inflation in the 1 or 2 years to come. I've read very quickly your question, so I'm not sure that I have answered. And I think maybe
covered all, I think.
Okay. Thank you for attending.
Thank you very much, Professor CABY. It was very useful, and thank you for everybody. We had more than 135 people during the session, and enjoy the weekend.
Yeah. Bye bye.
See you. Bye bye.